June 22nd, Stock Playbook. Down 80 points on the Dow. NASDAQ Composite was down 18 points, both down 0.7%. S&P 500 down 8 points, 0.6%. We felt that 1295 to 1300 level would be resistance. At least for one day, it continues to be the case. Great opportunity for you to get short stocks up here with a real tight stop on a move above 1300 and a close above 1300. We close above 1300, you cover your shorts, take whatever loss or gain you have, and you get out of them. But otherwise, I think we're going to go lower and test this 200-day moving average again. And if we don't hold it this time, could see the selling accelerate to the downside. What are you short? Last night we highlighted Cena Corp. Had a nice bounce today. 6 points in our direction. We think this could go lower. Apple Computer also had a nice bounce yesterday. We thought that was a good opportunity to short it up against its 200-day moving average. We're not shorting Apple for $2.69. We're short Apple because if the market rolls over and goes into a more substantial, 8-10% sell-off, bringing it down, 100, 150 points on the S&P, I think Apple could see the other side of 280. Okay, so that's why we're shorting Apple. You want to get long? We got stocks to go long too. Fusion IO, we mentioned it here in this video yesterday and the day before, and we continue to move on. I mean, you talk about stock that's up. At one point, it was up 45% from where it was when we gave it to our subscribers under 20. So sign up for the playbook. Our subscribers obviously getting intraday alerts. Robbins and Meyer. This is a stock that we went ahead and played as an earnings play 2 nights ago right here. We looked at it and Red Hat into their earnings. Robbins and Meyer obviously had good guidance, good revenue number. Depending on which options you bought, you could have made anywhere from as little as 50 to a couple hundred percentage points, approaching 400% if you bought the $45 calls. Red Hat, same thing. Stock is trading up in the aftermarket. Had a good report, beat by 2 cents. We'll see how that trades tomorrow. And if you're not looking for trades, we got investments too. ZAGG is a stock that we've talked about as an investment since it was, under $2 a share a couple years ago. We've bought it. We sold it, we bought it back again, and we continue to hold it. This is a stock that manufactures protective film coverings for the surface of electronic devices under the Invisible Shield brand name. Whether you buy an iPod, an iPad, an iPhone, a BlackBerry, HTC device, they always are telling you got to cover it, and they sell you that little Invisible Shield brand name. That's just one of their products, but this company's got phenomenal revenue growth, great earnings projections going forward. Institutions love it, and it's still under the radar of many institutions. This is a stock that still has huge upside potential. Now, that doesn't mean you go buy it. We don't advocate chasing stocks when they've run up, 50% in a couple of weeks. Let this pull back. Obviously, entering it on a pullback to the $10, $11 range isn't going to be as attractive as an entry level as when we started buying it. But ZAG continues to have a lot of upside. Again, this is just a sample of what we do. Lindsay Corp, LNN, is reporting earnings next Wednesday before the open. We got a great risk to reward trade on this using options. Sign up for our free trial and get a feel for what we do on a daily and nightly basis. I appreciate your time, and I look forward to talking to you tomorrow.